Folks, this is Nick Mirza, and today I have an honor and privilege. The money smart guy, Matt Sapaula. He's here with us. Served in U.S. Marine, 5 times best-selling author, financial coach, a mentor, visionary community leader, and 20 years of experience in financial management and expert into the money market. Did I say that?
Sure, yeah. And by the way, it's 3 times best-selling author.
3 times, I'm sorry.
Make sure.
3 times
I'll make sure we write another 2 books. We'll be yes, for sure.
So, well, thank you for coming and thanks for joining us.
Yes,
and
thank you.
And now we'll let it speak to yourself, and then you can talk about yourself first and what you have done and how did you went from bankrupt all the way to 7 figures. Let's talk about that.
So my story between how I got serving in the Marines. I was a single father and filed bankruptcy and didn't really have a trader skill set. But I found financial services. I found the money business. Somebody coached me and mentored me to make sure I knew how money worked, because it's one thing to make money, but it's another thing to make money work for you and understand how to continue to go up, double and triple and compound it. So I've been doing that for the last 26 years, and lots of strategies we use today are backed by the insurance industry. So therefore, people to make money when it goes up, but when the market crashes, it doesn't go down. When you build a financial strategy around rates, when you build a strategy around whether the economy is good or not, you're not really making money. So in the last 26 years of me helping people, we made money up. Market is down, we're always up, and so are our clients.
That's wonderful. And then the other expertise you have, Matt, you build leaders to earn and lead a legacy.
Yes.
Let's talk about that one.
So one thing I learned is that in order for me to have income coming my way, is either I've got to invest in things that provide me a return or a dividend or an interest rate, or I can build a company that runs systems and processes, therefore it creates revenue for my company without me having to be behind the buttons all the time. And I realized this 12 years into my career. So I was in the insurance financial services for 12 years with life insurance and annuities for 12 years. And I realized that the moment I stopped doing it, I don't make any money. And I realized I'm just self-employed. So what I did the last 10 years now is I went from a 1-man operation to now building a 5,000-man operation across the country by incorporating systems and processes that sell financial products and services across the country.
You have written 3 books.
Yes.
Amazing books, best-selling author on Amazon.
Thank you. Yep.
One of them is The Faith-Made Millionaire.
Yes.
Let's talk about this one. How the faith base can make you millionaire.
Oh, for sure. So I'll give you a story. When I was in church, I was always confused because the church I felt like I was being guilted always every Sunday to give to the church. I mean, I don't mind giving, but I was coming in a way that I just felt compelled or felt less of a believer if I wasn't giving my 10%. And I realized that the church is not very good at helping people with the other 90% because the church barely even mentioned it. Here's how you better manage money. And I realized reading the Bible that there are such profound stories and strategies inside the Bible that talks about financial stewardship and money. And I realized out of Jesus' principles, the majority of his parables, his stories of teaching people about life, majority of them were about money.
Amazing.
And King Solomon, who's the richest and wisest king who ever lived, owned money and real estate, everything, that he believed also in financial stewardship and money and building people and staying away from the wrong people that could corrupt your life and your finances.
So regardless which faith you believe in, you'll be successful. If you do it the right way.
And for me, the point is this: if you think you're it because of why you're here, that's a selfish way to look at it. Yeah. There's certain God-given talents and responsibilities that have been given you. And if you serve people from that capacity versus you always being the person that deserves all the shine and all the credit, my credit doesn't belong to me. If it belongs to my team, but even more so, what I've accomplished in life belongs to the big man upstairs. I don't deserve this life.
That's good. Let's talk about gotcha.
Gotcha. Yeah, sure. It's my basic 5 gotchas of money conversation. People ask me all the time, what do you do? And I share with them, I help people avoid the 5 gotchas of money when it comes to planning for the personal finances, for the personal retirement. Do you know the 5 gotchas of money? I don't know the 5 gotchas of money. Well, they are losses, healthcare, taxation, inflation, and procrastination. Most people, when they're looking to invest and save money away, it's only because they're making more money and they're beating inflation. There's more to it than that. For example, if you make money, you lose money, how long does it take for you to get back to what you lost? right? And how much risk you have to expose to yourself to get you to where you originally were at. And so a lot of people don't know how to avoid losses. Our clients haven't lost money. Their serious money, the money that, because they get invested in other things, but the client's money that they know needs to be there at retirement, 65, 70 years old, our clients have not lost any money due to index annuities, index universal life policies, based on the guarantees inside the contracts, backed by the promising paying ability, guaranteed paying ability of the life insurance companies themselves, which is a multi-trillion dollar industry.
Amazing. The third one, keep the keys.
I think you'll like this one even the best, because it's one thing to get property in real estate and purchasing your house. It's one thing to get the keys, because when you get the keys, if you're anything like me, you had tough beginnings and you really scratched everything you could to save money, and you finally got your first property. You finally got your first investment property, but that's because the banks favored you and everything went well. Your best financial picture. But what happens, Nick? Life. Like, for example, you just told me your partner this morning, right?
Yep,
I'm sorry to hear that, right?
Mm-hmm.
And that's life. That happens. So in the worst picture of people's financial life, I show up. We show up. Your financial strategies show up. The plan for the worst of life has to offer. Why? If you can't go back to work, or if you don't have the capacity to go to work, guess what? Your money will have to work for you.
Exactly.
And if your money isn't working for you, or if the insurance isn't working for you, then you're just working for your money. And back to my original premise, getting money is not necessarily the end all. It's how do you get money constantly flowing your way. And it's one thing. It's one thing to get the keys, but more important is how to keep the keys.
Wonderful. There are several faith here in America that I know personally, they don't believe in life insurance. Okay. And I have seen those families suffering when the person who provides the bread and butter is gone.
Yeah.
So what is the message you have for those faith-based people and the families? What is the importance of the life insurance in their life?
It's a short-sightedness of why they don't believe in life insurance, because here's why. I'm not asking of any faith for them to believe in life insurance. If there's anything you believe in God, you don't believe in life insurance.
That's right.
Life insurance is not a God. Life insurance is not a deity. Life insurance is a smart financial strategy to make sure that the goals and dreams and hopes that you have for your family are made whole if you're not there to make them whole for your family. You know, so for example, if you don't believe in life insurance, well, then you don't believe in insurance, period. So, by the way, here in America, before you close on a property, what do you have to show them? Proof
of insurance, yeah.
Proof of homeowners insurance and title insurance. Title
policy insurance, yeah.
Driving a car, what do you have to show proof of?
Insurance.
Yeah, that's right.
That's right.
Our phones, sometimes what do people buy?
Yeah.
Phone insurance, right? Apple Pay, or how come it comes to us? The people that make money. The most important thing that makes these things happen, why don't we buy insurance for that? The one that generates everything. That's the most important feature. And so I'd say that people thinking that life insurance is not something, but yeah, you're not right. You're not supposed to believe in life insurance, believe in God.
Of course.
But the financial tools, don't be irresponsible to think that life insurance is not a financial tool. Just like you look at your homeowner's insurance policy, your car insurance policy, your phone insurance policy, you're the most important person that's making all this happen. You have to insure yourself. It's the financial responsible thing to do.
So there are several families, they're like in the age of late 50s, upper 60s, what you call them, like single parents, most of them. Are they still qualified to get the life insurance, and is it too costly for them?
Yeah. By the way, 72% of people think that life insurance is actually 3 times more expensive than it really is.
Okay.
It's a survey we've done. So we often ask people, what do you think the cost for life insurance? For example, Nick, this morning we did a workshop, and we asked the person, how much do you think $1 million life insurance policy costs? This 30, 40 person, this young man stands up. He's 27 years old. I pay $37 a month for my $1 million life insurance policy. So you're right. It is expensive the older you get. That's why your children who are smart, educated professionals, entrepreneurs, they need to lock in life insurance today. And if you're older, you're 40, 50, 60, it's not too late. The most important thing there is you're healthy, that you don't have a change in health. You can be older, but just as long as you don't have a heart attack, stroke, cancer. Because if you do, you have one of those changes in health, it's going to take you 3, 4, 5 years after a heart attack, cancer, or stroke to reapply for life insurance to see if you can get it again. I had a client who had cancer. I had a client who had a heart attack. It took him 5 years after the heart attack or after cancer to apply for life insurance again. I often get asked, I just got a text earlier this year, Matt, do you have a policy for people currently going through cancer? Why do you think he's asking now? Now he knows the importance of life insurance. He wished he got it when he was healthy. Of course, he could not get life insurance because he had cancer. Therefore, if you're 40, 50 years old, and here's the thing too, if you're 40, 50 years old and a single parent, chances are you're also responsible for what? Probably your mom and dad, responsible for your kids. You're the most important person. Again, you're in the sandwich generation. You're between two generations. You got to take care of yourself, your mom and dad, your parents ahead of you, your children before you. Insurance is the easiest, least expensive way to take care of that financial responsibility.
Thank you. Very comprehensive. And hopefully that will make a lot of people understand what is the value and importance of life insurance, regardless of your age.
I got another story. We had a real estate client, right? Real estate investor. And they had about $50-60 million of real estate, right? Pretty impressive, right? And then we sat down and said, sir, do you realize you have an estate tax problem? So what does that mean? Anytime that you have your money over what they call the estate tax credit limit of the government, the country, you owe Uncle Sam taxes.
Of course.
Right? He didn't realize that. I didn't know that. I pay property tax. He simply didn't know that when you die, because you have a lot of money, you got to pay basically a wealth tax.
Exactly.
Right? That's what estate tax is, death tax. So how much do I have to owe? We did all the numbers. Him and his wife. We figured out his family would have to come up with $23 million of life insurance, cash.
Out of 60 million.
Out of 60 million to pay off the government with estate tax.
That's almost 40%.
That's right, because when you die, sadly, when that day comes, your family has to fill out a 706 form. It's inside my book, Keep the Keys.
Okay.
That's the last tax return you fill out to close out your social security number. You put your assets, your liabilities, your net worth. If your net worth is over the current year's estate tax credit limit, anything above that is exposed to estate taxation. In this case, $23 million. All of his money was trapped in real estate. All of his money was illiquid. All of his money, the only thing he really had was a few $1 million here, but he had a $2 million sitting in a brokerage account he completely forgot about. Think about the 60 million, only had 3, 4, 5 million in liquid cash. To make a long story short, all we did was reposition the $2 million he forgot about inside that brokerage account into a life insurance policy that was owned, and the beneficiary was an irrevocable life insurance trust. Because why? If he didn't have that, his family would have to rush to sell some of the property in the next 6 to 9 months to pay the estate tax of $23 million. And good luck selling property when you're in a rush.
Oh, yeah.
Right?
Yeah, that's tough.
So therefore, if they want to sell the property in this case, they can, but they can take their time. They weren't forced to sell into a fire sale type of situation. In other words, if he were to pass away, right away, the trust would receive the $23 million of tax-free money from the life insurance policy, which would pay off Uncle Sam immediately, keeping the family's finances private and out of the crosshairs and the meddling of the United States government or the state of California where he was at.
Wow.
That's what life insurance does. It protects everything you've built. Without it, you're exposing yourself. Michael Jackson, the pop star Michael Jackson, he passed away in 2009.
2009, yeah.
Till this day, his family estate, his money is still trapped in tax court, in probate court, because the IRS deemed that his asset, which is Sony BMG Records, was undervalued. So they went back to him to get more estate tax money.
Oh my God.
So his mother, 3 kids, don't have access cards apparently right now.
And it's been on hold. It's been 15 years. 16.
That's right.
Wow.
15 going on 16 years now. So that's why you want to use life insurance as well as trusts to keep things private, keep the government's hands out of your money.
So what do you advise to the people who have over $10 million worth of assets? How can they protect themselves from this estate tax?
Yeah, that's why life insurance is the least expensive way and most guaranteed way to transfer your money from one generation to the other. In addition to wills, you also need a trust. There's special different trusts that you can have within life insurance, wealth transfer strategies. And as much as you like banks to help you acquire assets, banks also love to have fund policies called premium finance deals that allow you to create the cash flow to pay the insurance policies to get the government and any entity out of your family business. So that's how you would establish that.
Well, there is a quote from your book or from one of your seminars that how to build a legacy, not just a safety net.
That's right.
Let's talk about this one. What does it mean?
Sometimes people are busy in defense mode. Defense. So I've talked a lot about defense. Those are good defensive moves. But I really create legacy. I believe it's one thing to have the blessing to be an investor, to make money, to be financially blessed with these resources. So instead of just worrying about protecting and just sheltering everything and playing defense, there's ways to make sure your money goes from generation to generation to generation. And that's what legacy planning is all about. Because if you feel blessed in with the situation where a lot of people in the world don't have money and you do, and you don't make the wise steps to do it, you're not taking full advantage of the opportunities available to you. And for some people, from some faiths, some religions say that's almost a sin.
Yep.
Because you have to maximize your gifts, talents, and abilities, and your resources.
Well, it is a sin, but it's not written in any book.
Yeah.
I mean, not any of the holy book that I'm familiar with. People need to understand, especially living in America, the cost of living, and also when the person dies, there's a lot of cost involved there too.
That's right.
That needs to be protected and very well taken care of way ahead of time.
In the Christian Bible, Matthew 25, in the parable of the talents, talks about the three different servants that were given money by the master. So the master tested his three servants. He gave one servant 1 talent, he gave the servant 2 talents, the other one said 4 talents, basically money. He left and said, I want to see what you guys do with it. And he gave them money based on their ability, right? It wasn't based on their status, but it's based on their financial literacy and their understanding of watching podcasts, perhaps like yours. And the first one that was given one, who was given the least, guess what he did? He buried it in the ground out of fear. The other ones, they duplicated. So when the master came back, he asked the servant, what'd you do with my one? I gave the least amount of money because I think you had the least amount of ability. He says, Master, I know how you make money and I don't want to mess with you. So therefore I just buried it in the ground. So the whole time when you were gone, I just kept it in a safe spot. So therefore here's back because I don't want to mess with your money. And you, what'd you do? I doubled it. You, what'd you do? I doubled it. And he looked at the one back and gave him the least. He says, you wicked servant, right? At least you could put it in the banks so it can earn some interest.
Yes.
But you operate out of fear. Let me snatch what I gave you and give it proportionate to the other two. You, out of here. So according to that, it was a sin because he operated out of the spirit of fear.
Yep. I agree with you.
Yeah.
So Monday night when we were over the phone, you mentioned something about that there is a way to purchase a property without sacrificing your liquid cash. How does that work?
Yeah, oftentimes a lot of real estate investors, all their money is trapped up inside the real estate. Okay, that's good. So that's what we call house rich, cash and freedom poor. So with the rates now potentially starting to drop, a smart strategy might be, I think it's chapter 3 or chapter 4 of my book. I have a couple strategies in there that you can do a strategic cash out refinance of the money, the equity that's inside your property, and not to exceed what you're currently paying in your mortgage right now. So, but now you've got access to what? You got access to the $200,000-$300,000 of cash. You put that money inside a properly structured insurance contract, like index universal life policy, and that over the years starts to grow and accumulate. At any given point, you can take that same cash. If it exceeds the surrender value of the policy, you can take that same cash to access and purchase other property without paying a dime in tax. Now, don't treat it like an initial savings account. It takes years for it to build, 3, 4, 5 years, minimum 5 years to build, in my opinion. Some other people say less. I'm a little bit more conservative because I want to risk anything that you put in there. But 3, 4, 5 years of it growing, compounding, and earning a rate of return, then that's when you start using money. I was showing my team a policy I used, established in 2012. My son called a few weeks ago. Now we're starting to use that money for other investments. But that was established 12, 13 years ago. Mm-hmm. So it takes a little bit of patience because I know a lot of people want to be right away. But if you want long-term, 10 years from now, 5 years from now, to have some form of strategy that you can depend on yourself, not depending on other people, this might be a potential strategy that people can follow.
Thank you. Annuities versus insurance. Let's talk about that.
So life insurance in case you die too soon, annuities in just in case you live too long.
That's right.
So annuities are, there's a basketball player here in America called Shaquille O'Neal.
Uh-huh.
And one of the things he says I love is annuities because annuities allows me certainty, guarantees over extended period of time. So if I put my money, for example, there was a Powerball winner. I don't know if you heard it, but one of the biggest things that we've been seeing online, searching for, my team was searching for it, is Powerball winner. So the question was, would you rather have $1 billion Powerball lottery winner? Would you rather have $400 million today or $50 million every year for the next 20 years? By the way, what do you think, Nick?
$50 million for
Every year for the next 20 years or $400 million today?
40 million, that's it, just the net 40 million?
Yeah, because you have two options, right? When you win the lottery, you can take it's a discounted rate, you get a lump sum check, or that amount, but they pay you over a 20-year period.
Well, when it's come to the financing, especially the way you do it, my math is not that strong, so I will ask for your guidance on that.
Okay.
Yeah.
But I mean, what do you think your initial gut feeling is? Do you want somebody to give you a $50 million check every year for 20 years? Or somebody give you a $400 million check that they know you got Sapphire here? And
I'll take the $400 million.
that's the exact thing they do. Do you know why? Because you have a strategy. Most people that don't have it right away, you fire it off right away. Most people don't have a financial strategy. If you got blessed with a $400 million check from winning a Powerball because you're so lucky to scratch out and get it, who's your first phone call? You know who to call,
of course,
right? A lot of people just don't know who to call. And people have these great answers. I want to take care of my mom. I want to bless the world. Awesome. Who's your first phone call? It sounds nice. But you got to have a strategy. Why? Because I believe that when you have your finances in order, you're just waiting for the blessing, waiting for the floodgates to unlock. So once they do, you know, make the first phone call, and you have that strategy, the vision now is funded. And so that's what annuities do.
Well, what happened, most of the lotto money that goes to the people, they don't have any vision.
That's right.
And they don't know what to do with that money. Some of them, they lose the money within a year or two, and they're bankrupt.
That's right. Some of these professional athletes in America, instead of getting their money now, for example, Allen Iverson, a couple of baseball players, Bobby Bonilla Jr., okay? One of our guys who runs our office in Puerto Rico, he was a pitcher here for the Texas Rangers. They got an injury. They got a settlement. Instead of paying me a lump sum cash right now, they said, pay me the next 20 years of my life after retirement. And how they got paid after retirement is not through the baseball team. What the baseball team did, they put their money inside in annuity, and they pay them that money for the rest of their life. That's what annuities do. Yeah, and that's what is afforded by insurance companies that offer life insurance and annuities like what we're talking about.
What inspired you to get into this money, financial planning, helping people? You're helping a lot of people. Patricia sitting right here.
Yeah, she's great. Yeah.
Yeah, I mean, I've known her for over 7 years. She was 17 years. And she was for a great builder. Now she's transitioning into the same thing, and she thinks very highly of you, the mentor, and the things that you do for her, and the entire teaching that you do, the classrooms.
Yeah.
What inspired you to get into that one, helping people make money?
So I was often asked during my 12-year individual solo practice, because I was a single father of 3 kids, no college degree, and I started having success. I started building my business in the insurance financial services business, started doing monthly seminars, started asked by the Federal Reserve Bank of Chicago to do workshops around the city of Chicago for Money Smart Week. So I was having a good time. The biggest question somebody asked me that got me to start thinking this way, Matt, why are you doing this? What gets you jacked up? What gets me jacked up is every time we talk about these financial concepts and people actually incorporate it and their lives start to change, their eyes get like this. They feel unlocked. They feel free. They feel like, where was this information? Biggest question we get is, where was this information 10 years ago, 15 years ago? Somebody got my book, Keep the Keys. Where was this 15 years ago? So therefore I wouldn't lose my house. I wouldn't miss my investment property. I got the house and then I got sick. I had to surrender the house, right? Where was this book? I didn't know about this. It's one thing for me to acquire the property, one thing to get the investments, another thing to make sure I keep it and maximize it for my use down the road. That's why I do it. And then when I see other people that's around me, I can create jobs. I can mentor people in business and see their lives start to change. New doors start to open up. Now, I'm not the get-rich-quick guy overnight. That's the problem. A lot of people think I'm the get-rich-quick guy. Because why? Because a lot of people today don't want to work for money. They don't understand the process that if you want to build a business, it takes time.
It does. And patience.
And patience. And doing over and over and over and over again and being excited about what you do, staying enthusiastic. Somebody mentioned to me the definition of enthusiasm, which means staying fired up about what you're doing between failure to failure.
Exactly. And be passionate about it.
Yeah, be passionate about it. And then knowing that my business, for example, Nick, what are healthcare companies? For example, we had a pharmaceutical company we're doing this. What does a pharmaceutical company, what is a drug company incentivized to get people to do? Be healthy or stay sick? What do you think? Exactly.
Yeah.
So their business is a model where instead of actually providing you health care, they're providing you sick care.
Yeah.
So therefore you keep going back to them, more drugs, etc. Right?
Yeah.
So I want to be in a business where it helps people. Because what's my incentive? The industry I represent is based on what? For people to live long, healthy lives. Why? Because the insurance companies don't want to pay out that claim early on.
Yeah.
You want to hold on to your money for a long time before they eventually have to pay out the claim or pay you that annuity. They want to hold your money for a long time. And that's why not everybody can get life insurance, because you got to qualify for it, and people got to be healthy. You have to have the right candidate. So that's why I'm doing what I'm doing. The financial literacy aspect of it, the generational wealth creation aspect of it, the fact that people can use this financial tool, which has been kept away from the multicultural community for a long time. I want to bust down all the doors and kick down all the gates that has been keeping us from having this conversation. And by the way, I can care if somebody's white, black, brown, you name it. I care about one color. The color is green.
I love that.
Right.
So at the very last, let's see what's the message for the community out there who never had the life insurance.
Mm-hmm.
They don't know nothing about annuities. So how do we get them involved into this system to help them out financially and secure their future?
I can say for the last 26 years of me being in the financial services industry, this industry for the last 26 years, to my last point, it's been predominantly older Caucasian males that's been inside the insurance industry. Now, nothing wrong with that. It's not a racial thing. It's not a emotional. It's just the status of the insurance industry. They have done a poor job of attracting and recruiting people that can come into the industry to advocate for their communities or whoever they represent. So one of the biggest things that is a big overlooked community is the Black and brown community, women in business, women in professions. Because more women today, the reality, Nick, we might not like to hear this, but more women today are outliving their husbands by a lot.
Yeah.
And they're taking government positions than men. They're graduating colleges more than men. They're taking positions in corporate America than men. They're starting businesses some more than men. So more women today want other women to talk to as it relates to their finances. And oftentimes when we're looking at an overlooked, underserved industry and the barriers now are being kicked down, that would be my message. There's a financial tool in America that has been used for the last 200 plus years. The first evidences of life insurance being established in America was long before America was even around, 1759, by the Presbyterian pastors. Presbyterian pastors were the first people to create insurance inside the colonies of America. That was 1759. That company today, as we know it, is Prudential.
Yeah. Wow.
Yeah, a little bit of history licensing life insurance.
Close to like 280 years old or something.
That's right. That's right.
Well, thank you so much. So how does the community can get involved into this process, and if they want to get in touch with you and your team?
Sure.
So how to get in touch?
Absolutely. You can reach out to myself, Patty. Go to our website at moneysmartguy.com. Instagram, moneysmartguy. You go look us up on LinkedIn. We're everywhere. Social media, websites, very easy. Moneysmartguy or moneysmartguy.com.
Well, thank you. And the very last, Patricia, I just wanted to thank you.
Thank you.
To introduce me to Matt. He's a wonderful guy.
I like your jacket, by the way. I can
Thank
see
you.
we're both sport
Well,
jacket
both,
guys.
yeah, I mean, I think Monday when we were talking over the phone, I think we just talked about this and how we're going to dress.
That's right. That's right. We did it.
Yeah, but
Right.
Thank you so much, Matt. For appreciate having you.
God bless.
Patty,
Thank you.
Thank you.
Thank you. Thank you. Pleasure. Thank you so much.
Thank you, Matt, for always having time for all of
Oh,
us.
of course. I got you, Patty. No
Thank
problem.
Thank you.
My pleasure.
So, guys, that was Matt Sapaula, the money-making guy. Oh no, what's the right word?
Smart guy. There you
Yeah,
go.
yeah, there you
Love
go.
it.
So if you want to get in touch with Matt or Patty, you can go to the website, you can go to Instagram or LinkedIn or Facebook, or you can get in touch with me. I can get you hooked up with these guys. And it's the right time for you to think about getting involved with insurance and annuities to protect your future and build a legacy, creating a generational wealth. Thank you so much for being part of our podcast. Thank you.